everyone, this is Ruth the Forex Lady here with another video, and today we are going to be talking about entries. So when we're talking about entries, obviously we would have had some type of trade plan which would have been covered in a previous video. So when it comes to trade planning, I would always say plan your trade and then trade your plan. So after you have your directional bias, you would be looking for where you're going to actually enter the trade. You don't want to be selling at the absolute low of the day, nor do you want to be buying at the absolute high of the day. So for example, on this particular day, we know that we're looking for sells. You don't want to be at the bottom here selling because you would have never seen a profit on that particular day. You want to sell as high as possible and you want to buy as low as possible. Secondly, it does not negate how important your trade management is. So you don't want to enter the sell, not manage your position, and end up in overall loss. Two persons can enter at the same price, the same order. One can be profitable and one can end up in loss. So that is why trade management is very important. So let's get right into it. So we have three types of entry triggers that I tend to personally look at. We have support or resistance, close of the EMAs, or your TDI. So let's go through all of them. So support or resistance can be either your quarter point, EMAs, Asian ranges, or supply and demand. So for example, on this particular day, we would have seen price came up to your quarter point, and then you would have had that beautiful sell-off. Now, granted, price did not necessarily tap the quarter point, but we also spoke about EMAs. Had you taken it at the 200 EMA, you'd have had about a 24 pip pullback. And from that 24 pip pullback, you could have had over 100 pip to capitalize on. The next thing we want to look at would be our Asian ranges. So some persons look at the Asian high, the Asian low, and the Asian midline. So I'm looking for an area where we would have had price coming off of one of the Asian ranges. Now, when it comes to your Asian ranges, I like to buy at your Asian midline or below, or sell at your Asian high or above. Asian midline or above, sorry. So you want to sell anywhere above your Asian midline and you want to buy anywhere below your Asian midline. So let's see if we can find some pairs that seem to be respecting our Asian ranges. Okay, so look, on this particular day, what did we have? We have our Asian low right here, and we can see price came and tapped the Asian low and took off. Okay, let's look at this day again. Price came down, tapped the Asian low, and then took off. Okay, so we have our Asian ranges. This might be about our Asian midline somewhere around here. So what did price do? Price came and tapped the Asian midline, also close to a quarter point, and then we had that nice sell-off there. So that is how we use our Asian ranges. Another thing that you can use is supply and demand. So my very good friend and trade partner, Kadisha, she is excellent when it comes to supply and demand zones. So you can actually look for sells in a supply zone and buys in demand zone. Obviously, you are looking for everything in line with the trend. All right, so we looked at quarter points, EMAs, quarter points, Asian ranges, and supply and demand. Regarding EMAs, you can look for price to come and tap your EMAs. So like for example, on this day, tap on the EMA, sold, tap on the EMA, sold. Okay, came down again. This looks like it was an Asian midline bounce, but you could have also taken it at the EMA. You had about a 20 pip pullback to catch a 1 to 2 risk to reward ratio. Okay, so you have your quarter points, EMAs, Asian ranges, and supply and demand. The next thing I like to look at would be our cross of the 13 EMA. So you're coming to the markets on this particular day and you have your directional bias, which is a sell. Why are we selling? Because we have our 50 below our 200. The next thing I want to see is price closing below my 13 EMA as so. Once I see this, I'm saying yes, price is getting ready to go in my direction and I'm looking to sell. It's as simple as that. Let's look again. We have our 50, 200 up. Price came and closed above the 13 EMA on this candle. Pull us back a little bit, about 26 pips and 80 plus pips to the upside. Okay, once again, right here, we are looking for sells. Right, price came up, closed below, and then we would have caught what? 70 pips to the downside. So like I said, when it comes to entries, you can look for your close above or below your 13 EMA. The final thing I want to look at would be our TDI. Now you guys know how much I love shark fins. So if I have a shark fin, I'm looking for price to close below my RSI, to close below my signal line. However, my best trades are when the RSI would have crossed below the market baseline, as I would have covered in a previous video, whereby you know that price is in fact going in that direction. Okay, so once again, we have three types of entry triggers. Support or resistance, that is for more aggressive traders. So we're looking for quarter points, EMAs, Asian ranges, and supply and demand. Catch-up closes or 13 EMA closes, which are for persons who like that more confirmation. Granted, some persons do actually manually exit if price closes back above the catch-up. And we have our TDI, which is a really good indication that price is in fact going in a direction, especially if you have your cross below the market's baseline. So I want to thank you all very, very much for spending this time with me, and I will see you guys in the next video. Bye.